All right, welcome back, everyone. So it's my pleasure to introduce our next panel and our final session of the gathering, Bold Visions for Building Financial Well-Being for All. So I'd like to introduce our panel, and then we'll be turning it over to Adam for the moderating. So we have Carmen Daniels, who I got to meet yesterday. She's the Research and Communications Lead at the Indigenous Consumer Assistant Network. And Carmen has a pretty interesting background, is that she's Cree Métis from Alberta, from the Edmonton area, and has been living in Cairns, Australia for the past 16 years. She's a co-founder and then researcher at the Indigenous Consumer Assistance Network, which provides specialized financial counseling and financial capability education for Indigenous peoples in North Queensland and the Torres Strait. So we're pretty excited that we have someone all the way from down under visiting us here, making the conference more international. And we have Hannah Moffat, who is the Population Health Equity Initiatives Leader with the Winnipeg Regional Health Authority. And then we have Eliza Gutman, Senior Director at the Center for Financial Services Innovation, CFSI, which is focused on helping financial service providers develop strategies, products, and services to improve their customers' financial health, and is a real leader in terms of financial inclusion in the United States, so another international element to this panel. And then lastly, our fearless leader of the ABLE gathering, Adam Fair, the chair of the ABLE Steering Committee and Vice President, Strategy and Impact at Prosper Canada. So over to Adam.
I'm really happy that they let the DJ come up on stage for one session. When I'm not doing those other things, I'm picking songs for conferences. I'm hoping to move on to maybe bar mitzvahs and weddings after this. We'll see. This whole financial empowerment thing might not work out for me. So in terms of this session, we're going to do just a quick reflection, and then we're going to have our three brilliant speakers come up one at a time and do a quick presentation in terms of how they fit into this world and how they're thinking about bold strategies for really advancing financial well-being for all. And so we're in for a real treat. And then after they do their presentations, we'll be able to have a bit of a conversation up on stage, and then we're really looking for some questions from you guys. So throughout the presentation, just be thinking about what questions you have for our three speakers. But before we get started, just a quick reflection activity that you can do by yourself, but this will help prime your brain for this conversation. I want you to think of one of these three questions. So what do you think the role of what role do financial institutions play in building financial well-being? So that's question one that you could be contemplating. The second one is, what do you think the connection between financial well-being and physical and mental health is? We've heard a little bit about that already. So you can be thinking about that one. And then finally, what's the connection between financial well-being and the overall health and well-being of Indigenous communities? So if we can take a couple of minutes, just think on some of those questions, contemplate what you think the connection is, and then our fabulous speakers they'll give you the answers. So we'll take 2 minutes for you to do that reflection. The role financial institutions play in building financial well-being, the connection between financial well-being and physical and mental health, and finally, the connection between financial well-being and overall health of Indigenous communities.
To improving financial wellness for Indigenous peoples, but I'm also tucking in a little bit of innovative solutions that are going on in Australia to bridge financial exclusion. Financial exclusion is the term that is bandied around in Australia, and it's something that's been measured longitudinally over since 2012. So we have a really, really good understanding in Australia about who is being financially excluded. This language is starting to change a little bit. It's moving to the language of financial resilience. And so first, before I get onto my first slide, there was a few things that I wanted to talk about that is a little bit different in Australia from what I've picked up here. In Australia, we have a very systems response to financial exclusion. So there is a large federal government involvement in the direction that we take in our financial inclusion initiative. So a really top-down approach. But it also means that there's a lot of funding as well. So the federal government plays an integral role in how we do financial inclusion in Australia. Banks play a huge role. They are the leaders in research, in financial inclusion research, as well as funding innovative programs on the ground. So without banks, unfortunately, there just isn't a lot of government funding around, but they fill a huge gap for us. The other thing that is really interesting about Australia is they have a really robust regulatory framework, and all of these things interact together. So there's a sheet of paper on your table that is an infographic, and at the bottom of that infographic there's some information about the two national pieces of legislation that interact to create that regulatory framework. And one is the Australian Consumer Law, or known as the ACL. The other is the National Consumer Credit Protection Act, and these are national laws. We used to have state-by-state laws for consumer protection. All of this has been changed, and our consumer laws have really, our credit laws have really been tightened up after the GFC. So, those are the how Australia works in the financial inclusion space, and I'll just move on to the next slide. So I don't know if any of you have heard of the no interest loan scheme, but it is a really interesting non-bank financial product that exists in Australia, and it's available on a national level. So my organization has been a NILS provider for many years, and to give you a little snapshot of it, a person who has a low income, largely a social security benefit in Australia, it's called Centrelink benefit. So if you hear me say Centrelink, that's what I mean. A person on a Centrelink benefit can apply for a no interest loan for an essential household item. And this is really interesting too, because it's a little different in Australia. If you are a renter, or if you're in social housing, you need to supply your own washing machine and your own fridge in every single rental property. So there are obviously going to be huge access barriers to providing these kinds of assets for yourself. So the no interest loan scheme is a catalyst for low-income people to be able to purchase the essential household items that they need to live and function. So I've just put up some stats here. Another interesting thing about Australia, and the reason why the no interest loan scheme works at such a national level and works for so many people you can see in the stats, is that the federal government, under the Social Security benefits, they have a national payment method scheme. So if you're on a Social Security benefit, you can pay back your rent, you can make payments towards utilities, school fees, a range of things, before you get your Social Security benefit into your bank account. So you can elect to voluntarily make payments to a range of items. This is called CenterPay. So the no interest loan scheme interacts with the federal government payment method scheme of CenterPay, and this creates a really low repayment default rate. So this is why NILS is such a fantastic product and works really well in Australia. The Financial Inclusion Action Plans is called FIAP, and this is, again, a demonstration of the government, industry, and community partnerships. The FIAPs were introduced last year, and my organization is part of the FIAP program. And so what we do as banks, industry, and government, and community organizations is we commit to resources and developing pathways for greater financial inclusion. So I've just put up some links on all of these pages if you want to take a look at these yourself. So we are coming together to identify the gaps in financial exclusion and to identify practical actions. What's so interesting about the FIAPs is that all of our FIAPs that we create are measured. So they're measured by the Center for Social Impact and a large international firm called Ernst & Young. So everything that we say we're going to do, we actually have to do. Another interesting thing that's happening in Australia, as I mentioned at the onset, is the long-term research of measuring financial exclusion, which has now moved into measuring financial resilience. So we have a lot of robust data in Australia. At first, when measuring financial exclusion was about measuring access to financial products. And the first three reports, which is the green one on the left-hand side, is about measuring access to basic banking, access to general insurance, and access to credit. So now they've moved into a new area of measuring population access to financial resilience across 4 key areas. And you can see them on the screen here, which are economic resources, financial products and services, financial knowledge and behavior, and one's social capital. So these are really interesting reports. 3 just came out in the last few months. So if you go to the link at the very bottom of the page there, you can access those 3 reports. We are also working towards building a self-determined Indigenous financial counseling workforce. So my organization, ICANN, is the leader in developing Indigenous financial counselors nationally. And when we started out, there were only 4 practicing qualified Indigenous financial counselors in Australia. In a partnership with the Commonwealth Bank of Australia, which is our largest bank, we have developed a program to train Indigenous people to get their diploma of financial counseling, which is a national program and it's nationally regulated. So we're building the financial counseling workforce, and I just got told my time is up. Thank you very much.
No leeway here. We're squeezing it all in. Okay, so we've got Hannah coming up next. And if you checked out her bio, she's probably lived in more provinces than you have. So
Yeah.
we're so glad to have you here.
Okay, hi, my name's Hannah. So I have the longest title, Population Health Equity Initiatives Leader at the Winnipeg Regional Health Authority. So I live in Winnipeg, originally from Newfoundland as a settler. And I am going to do this in a way of like talking a little bit about the social determinants of health, which many of you know of, and really recognizing that I stand on, there's so many healthcare providers who are interested in income and health and the relationship that you're going to get my version, but if there's one takeaway from this, that there's lots of people in the health system who are interested in what you guys are interested in, right? So this actually comes from the Canadian Medical Association, and what they did is they made this graphic that said what makes Canadians sick. You could also frame it more positively of what makes Canadians healthy. And they think about the environment of air quality being about 10% of what makes up your health, and 15% about your biology and your genetics. They say 25% is about healthcare. I think that's a little bit high, doctors, but that's okay. And then they talk about 50% as your life. And at the top of that, they put their income, they talk about gender, they talk about community belonging. And so in the health field, we call that, the AKA is the social determinants of health. And there's so much literature on this in healthcare and health practice about, and there's one that's called the Canadian Facts, where they list all 14 of them and the relationship between income and health and housing and health, and here's all the data. And then other people think about the social determinants of health as more of thinking about everything, about health, mental health, physical health, well-being at the top, and then how interconnected all those things are. We know that our gender related to our income, related to our education, same with ethnicity, culture, all connected, right? Intersectional. So if we think about the circumstances where we live, work, and play, that's what we mean about the social determinants of health. Other people, and this is quite an interesting reading here, that's about the Indigenous determinants of health here in Canada, and how they've described it as thinking about those determinants of health that are most proximal. So you think about your income, your education, your health behaviors. And then they think about what is the intermediate determinants of that. So why do you have certain health behaviors or certain employment and income? Well, that's related to our systems, cultural continuity, our community infrastructure, resources, capital. That makes sense, right? But then why do some communities have that and why others don't? And then they go to the distals, the whys of the whys of talking about colonialism, of racism, of social exclusion, and self-determination. And so I'm going to bring you all the way to Winnipeg for a moment, and this comes directly from our community health assessment. And what they've done here is they've done rates of premature mortality rate. So that means that they've counted if you died before the age of 75. If you died after 75, we didn't care about you for this, but not that we don't care about you, but just for this, okay? So died before the age of 75. And what they did really nicely in this report in our community health assessment is they put River East North, our highest income community, at the top, and they put Point Douglas South and Downtown East right there at the bottom. And what you see here is this health gradient where those of high income doing better than those of low income. And we see this pattern over and over and over again. And so when we think about how this affects communities, that this conversation about income is that down Point Douglas South, experiencing 3 times as many funerals in their community for someone under the age of 75 compared to River East North, and what a big difference that makes. So I added this slide after the talk, was it this morning, right? We had a conversation. Well, one was about the billion-dollar solution. The other was about the cost of healthcare. And so this comes from the Public Health Agency of Canada, and what they tried to do is estimate the economic burden of healthcare costs. And they only measured 3 things: prescriptions, physician visits, and acute inpatient hospitals. So this is an underestimate, but it is of those 3 things. And what they talk about is they put it the lowest income community as in that one section on the furthest, all the way 20%, 20%, 20% compared to the highest income community members at that 20. And then they compared them and said, okay, if everybody did as well as the highest income group, what would our healthcare costs look like? And so they talk about a burden of $6.2 billion in healthcare dollars, again, an underestimate, and how 60% of that burden is actually borne or is in the lowest income group. 60%. So there's something going on there in that lowest income group where not everybody's had the same opportunities. And so this is really important. So I'm taking you back to Manitoba because we know healthcare are huge costs in our provincial government. And this is from 2015, and it's just to say over 40% of the budget on health, healthy living, and seniors compared to other things, right? So we've been trying to have this conversation about the social determinants of health, to have a conversation about equity, about health equity, about all people having the fair opportunity to reach their full health potential and not being disadvantaged by social and economic and environmental conditions. And so I'll tell you, this is a hard conversation in our health system because we're talking about advantage and disadvantage, who has been advantaged and who hasn't, and having that conversation say, hey, healthcare system, you guys are part of the problem and not yet part of the solution. And so I'm going to run out of time. So here at the Winnipeg Regional Health Authority, part of my work has been involved in developing things like position statements, action plans to say, okay, we recognize these health gaps, we need to do something better, and a whole goal of shifting organizational culture. So we've developed tools and workshops like this one for healthcare clinicians, where it's things about what you can do at that individual level with a client, and then thinking about the broader influence for influencing system and policy change. So things like screening for poverty, asking questions, and there's this booklet that someone already mentioned, Nora LaRue's name, who developed this based on some of the work happening elsewhere, having conversations with clients about benefits and the importance of income tax filing. We also have been aiming to do some system advocacy stuff, and this is where it very much is based on relationships. Why am I at this conference? Because of Louise, right? I have joined the Manitoba Financial Empowerment Network, and I have a working group within our health authority that's called Health for All Economic Inclusion, because I didn't know the lingo, but that's what we decided to call it. And there we have conversations about some of the work that is happening on the front lines. We've got somebody who we're calling a income security promoter who's working with primary health care teams to actually access benefits for clients and trying to do that system advocacy at the same time. We put in, on behalf of our public health team in the WRHA, we put in submissions for the federal government poverty reduction strategy and the provincial poverty reduction strategy, taking a look at some of what our partners were saying so we could kind of say similar things. And then that whole thing about reframing this conversation about health, because we spend so much on healthcare, Canadian identity is based on healthcare, so reframing it and saying, what could we do to promote everybody's health? Ha, I did it. Yeah.
That was impressive. Okay, and finally on our speed round, we've got Eliza. She's got 600 slides, and she's got the same amount of time, so good luck.
Oh boy. Adam's right. I have way too much content for 7 minutes, so I'm going to try to speed through. I'm going to put on my best New York voice and try to give you the cliff notes, and everything is cited so you can go home and do all this lovely bedtime reading. So CFSI is the Center for Financial Services Innovation, nonprofit organization based in the States whose mission is to improve consumer financial health. And we do that by working with the financial services industry in a variety of ways to achieve this mission. So we defined financial health about 4 or 5 years ago when we started doing this work, using this language, to be the state that comes about when what you do every day, both the products and services you use as well as the behaviors that you engage in, help increase resilience and help you pursue the things in life that you want to do. And then we studied this and we said, what does this look like in the United States? And this is a very boiled down version of a complex segmentation that was based on behaviors and attitudes, but ultimately we found 57% of the American population was struggling financially. They were not financially healthy. And then we asked, well, what's the relationship with income? And we found that there is a correlation. I don't think anyone here will be surprised to hear that. But over a third of the population that is financially healthy is in the bottom 2 income quartiles, and 35% of those who are unhealthy are in the top 2 income quartiles. So then we did a more sophisticated analysis where we threw in all our demographic indicators and we did a regression, and what we found was, yes, income is significant as a predictor of financial health when you control for demographics and attitudes, but saving and planning behaviors are actually more predictive of financial health, which says to us that there's a real potential for the financial services industry to help move the financial health needle if we can get people products and services that help them establish and maintain those healthy behaviors, that there's real potential for the financial services industry here, irrespective of what's happening on the income side. Now, lest you think that this is just a problem in the United States, and yes, we have many more problems than you do, we're painfully aware. Our friends at Seymour Consulting have done a survey in Canada looking at financial health and financial stress, and they have found very similar trends. And this is just one of their data points that they've made available, looking at financial stress, and that in fact it's hugely prevalent among Canadians, and that it's prevalent even across the income spectrum. Right? So more than a third of those in the highest income groups in this chart, you can see, say that they have extreme emotional stress caused by money. That's really shocking. That's a very strongly worded statement, and to have that significant of a population agreeing with that is really surprising. So as we think about why should financial services institutions care about this, well, we think that this is a real massive opportunity for competitive differentiation and is a huge business opportunity, right? So consumers are looking for this. They want help from their financial institutions to improve their financial health, but not many of them are finding it. And when you ask them, they'll tell you that when they feel like their financial institution is actually working to help them, they're more loyal, they buy more products, and their satisfaction is higher, right? All of those things then translate to the business case, right? If I'm financially healthy and I spend less than my income and I'm saving, I've got higher balances. If I've got maintain a good credit score, good levels of debt, then I'm less likely to be delinquent, default on my loans, and all of these things translate down into the business case for financial health. So as you think about how you go about developing and implementing a financial health strategy, we've developed this financial health journey. And the key thing that I want to talk about here is the last part, which is more of a circle than a straight line. And it involves measurement, right? How do we know if we're having the impact that we want to have? We need a way to measure it, right? And we've been advocating for financial institutions to measure financial health so they can really understand if they're having that impact. And so this is a framework for measurement that we've developed to help financial institutions do that. We've also developed quality guidelines to help financial institutions think about what does quality mean, right? How do I develop a product that is high quality? And so we've developed, in a very cross-functional way, this set of compass principles, which are general, and then to operationalize them, we've created guidelines for what does high quality mean in certain types of products and services, checking, savings, small dollar credit, et cetera. And I'll end with some examples, right? So who's doing this in the real world? Like, is it actually happening? And so we have a number of examples that I'll highlight here as we wrap up. EarnUp is a startup in the States that helps people repay their debt. It automates it and helps people optimize how they repay. And they successfully help people avoid late fees and missed payments. And Freddie Mac, one of our government-sponsored entities that is very highly involved with mortgage lending in the United States, recognized that this fintech app could be really useful in helping people who are aspiring to homeownership, who need to bring down their debt, but also people who are getting into trouble and may be at risk of defaulting. So they've now partnered to make this product available. Another partnership that I want to highlight is between Nova, another fintech that was part of our incubator program, the Financial Solutions Lab, and they're here today, that is working to bring people's credit records from across the world to the countries where they have immigrated to, so that they have more opportunities in their new adopted countries. And so they've partnered with TransUnion to do that and have launched here in Canada. Last couple that I'll mention, big banks in the United States. So Wells Fargo has invested in a financial health telephone banker program, where they've conducted tens of thousands of phone calls with consumers to help them take control of their spending, saving, and debt. And then Key Bank has gone really all in, adopting financial wellness as a key part of their mission, going all the way to acquiring a fintech called Hello Wallet, which provides a financial wellness score, which they've now made available to all of their customers. So right in under the buzzer. Any questions, feel free to follow up. But thank you so much for having me. It's great to be here.
Excellent. Lots of, bedtime reading for you guys when you get home. So, but yeah, let's just jump right into a conversation about it. I think you guys come from very different perspectives on this issue, but it's all really around how are we thinking about taking this work to the next level? How are we making systemic change? How are we actually influencing some of these large institutions that if they shift, could make a really big difference towards that goal of building financial well-being for all. So I'll start with you, Carmen. Sometimes we think about some of the challenges that are faced by some Indigenous peoples and communities, and they feel daunting. So I'm wondering how financial well-being relates to these other challenges, and how have you found ways to demonstrate that this is something that communities should be focusing on?
Thanks, Adam. One of the things that I didn't mention in my presentation, but is really important, is that Australia has also very fluid government policy when it comes to Indigenous social security benefits, and more recently, non-Indigenous people as well. So in 2007, the federal government decided to start quarantining 50% of Indigenous incomes of Indigenous people who lived in the Northern Territory. And they have moved these trials, these pilot programs of quarantining people's income so by is basically it's to pay rent. The quarantine money is like to pay rent, to pay essential household items, and give people less cash. I'm not saying I agree with this. I'm just saying that this is what the policy landscape looks like at the moment. They first started trials in remote communities, and then they moved them into mainstream communities as well. So this idea of Indigenous financial wellness, even though there might be greater challenges like land rights and social self-determination and things like this, it's very much entwined in those challenges, and we're dealing on one side with a federal government who leads a national financial literacy strategy and provides the funding for our programs and services, but also are shrinking government benefits at the same time and largely impacting Indigenous people. So I see them as both entwined, and fixing one will help fix the latter.
Thank you. And then Hannah, I've talked to some healthcare sector providers that are skeptical a little bit that, why aren't the doctors focusing on helping people that are sick and leave this other work to the social workers? So maybe you could talk a little bit of how you deal with that sort of perspective. You can grab that.
Okay, I think it's on. Yeah, okay. Well, I get that question a lot, as you can imagine. So one of the things that I was trying to really talk about is just this idea that we need to tackle the root causes of some of the health differences that we're seeing. And so that's like the main response all the time, is thinking about, okay, well then why is someone in the hospital? Why do we see this level of, even we see dental extractions are like 9 times higher in our lowest income communities, and it's because of not having the opportunity to buy healthy food. So we need to tackle those underlying things and have a conversation about it. As I joked to you earlier, that there's a lot of people who are really involved in this, like Dr. Gary Block from Toronto, who's been very eloquent and really trying to push this agenda. And he's done a really great job, and I think actually among the medical field, of changing their perspectives. Because it's so important, and that this is a policy issue, and it's an important issue that we can't just keep putting the healthcare Band-Aids on. The other thing that I often talk to healthcare providers about is that they will say to me, well, Hannah, if I ask that question, and it's often framed in a question that's, one is the dignity question, says, what do I need to know about you as a person to provide you with the best possible care, in order to open up the opportunity to have a conversation. And if they open it with that dignity question, they're going to tell me something that I am not going to be able to answer. Well, you've got your blinders on, because guess what's going on for that person? It's happening anyway. And so how do we take off those blinders and even think about the basic thing is that we're trying to do referrals to community-based organizations who can do it better than us, or trying to shift internally our systems so that the social worker doesn't just get a blank piece of paper that says talk to them, but actually a warm handoff about what we're looking for. This patient has had this conversation, and here's how we move it forward. So to me, it's sort of like that mind shift of, for the practitioner themselves and for like the Canadian Medical Association to be talking about the determinants of health is, we've got to get to the root causes.
Excellent. And then Eliza, I'm assuming you gave us some examples of financial institutions that are playing nice with you, but I'm assuming often you're talking to bankers and they're like, this sounds all warm and fuzzy, but at the end of the day, we need to make a profit, and we work in a competitive environment. And so when I'm thinking about financial health, that's not our obligation. That's the obligation of the individual or maybe the government. And so how do you counteract the skeptic that you run into in your travels?
Yeah, so I think it comes down to serving your customer. So let's just take the for-profits. Obviously we have nonprofit financial services providers as well, but in the for-profit world, if you think your job is to drive shareholder value, how do you drive shareholder value? Well, you have to capture value. And to capture value, you have to deliver value to your customer. Your customer is struggling, they have a need, they're looking for help. What better way to capture value than to deliver that value to your customer? So there's a professor at Harvard Business School who was looking at what makes companies more resilient in downturns. And what he found was that the thing that these companies have in common is that they are operating from an outside-in perspective rather than an inside-out perspective. He would describe an inside-out perspective as, I have products, I'm going to push them on the world. Not successful. The outside-in perspective is, figure out what your customers need, maximize value for the customer, and that will in turn provide value to the organization. And since we're talking about shareholder return, he's quantified, so he followed 9 companies where they sort of exemplified this strategic orientation. And I'm going to read this to you because I don't want to get it wrong. He said those 9 companies, from 2001 to 2007, their shareholder return was 150%, which outperformed the S&P 500 returns of 14% over the same period. That's a huge gap, right? So it sounds warm and fuzzy, but it could also be recategorized as just providing the service that your customers are looking for.
Excellent. And this one's for any of you. So it appears you're really trying to make large systemic change, and these institutions are big and complex. And so I'm wondering if you could tell us, and you hinted at it a little bit with your presentations, but like, what are the tactics you're using to actually go at this systemic change? A lot of us want to be involved in this work, and we don't know how to even go about it because it just seems so daunting. So what are the specific tactics or approaches you guys are pursuing to actually change some of these pretty massive systems?
So at ICANN, we're doing two things. One, we are born of being a consumer protection organization. So for us, financial literacy, or as we call it in Australia, financial capability work, goes hand in hand with the consumer protection and that robust regulatory framework that I was talking about. So we bang our drums all day long about the need for government to pay attention to the consumer protection side, because it's only one side of the story. And that's the part, that structural change that we need to really work on, as well as individual change.
Yeah, for us within the Regional Health Authority, we have spent a lot of time internally talking and having discussions. And I almost think about those discussions about values, about fairness, about opportunity have been essential for increasing understanding, and then pairing them with data, and data about numbers, and data about costs, and having that conversation. It feels like over and over and over again, banging the drum. But in different ways and with different people. And for us, it has been very much a self-reflection of who's in our organization, what do they look like, what are their backgrounds, and having some conversations that are uncomfortable, of how we hire people who are like us, right? And who, certain level of education, certain way of thinking. And so we've been just having those conversations, and one of the biggest pushes for us was to put equity in our strategic plan as one of the values. And two values were added. It was always care, dignity, and respect, and we added equity, and we added accountability. And we kept talking about how those go hand in hand. We're accountable for the decisions we make, and we're trying to promote conditions for everyone. And so putting that in the strategic plan has given everybody kind of the opportunity to do some self-reflection. We put it in there, we don't actually know what that looks like in practice. And actually putting it in there and then saying that out loud to the decision makers to say, okay, we gotta talk about it.
So I think similarly, we have a multifaceted approach, right, where we take research and data, we combine it with innovation as a way to sort of push the incumbents, and then we bring them all together to the table to talk to one another. We also, I think a really important piece of what we do is we're talking to policymakers and regulators, because we can't have the innovation that we want to see that makes all of this possible if we don't have a regulatory regime that allows for it. And so we frequently find ourselves in the position of talking to regulators and policymakers and saying, hey, these are the constraints, these are the barriers, this is why this is actually great for consumers, and you have a policy that's standing in the way. And so we sort of we think all of those pieces of the puzzle are really necessary to bring it forward, and really working cross-sector to do it.
Excellent. Okay, so this session is called Bold Visions for Financial Wellbeing for All, and so this is your chance to maybe transcend what is possible in our lifetime or not. But what's success look like? How would we know we got to where we want to be? And so maybe you guys could just take a moment and share with the audience, what is it we're striving to do, and how will we know when we get there?
For the work that we do in remote communities in far north Queensland, we have huge geographical barriers, we have socioeconomic barriers, and we know a lot of the issues. For us, access to banking and access to mainstream services, access to quality financial counseling services is still so important. It's the things we were talking about when we started the organization in 2001. It's still the things that matter to us. So that's what success would look like, is that everybody has access to basic banking, access to safe and affordable financial products. And
yeah, I remember seeing this hard question and thinking, oh boy, because for me, success would look like combating racism and discrimination, like fully, and that idea of inclusion, and then how would we do that? And what I've been reflecting on, and this is sort of like the whole 2 days and learning something different from all the different people in the conversations, is about change and the leadership required for that change. And I think the requirement to really have those conversations that we're uncomfortable having. And so one of the most recent things that we've been doing in our organization, and I didn't put it in the slides or the reference guide, was we've been reading the Truth and Reconciliation Commission. And there's a document that was a TRC reading guide that was developed by the Manitoba Harm Reduction Network. It's available online for anybody for free. And actually going through and having conversations about power and privilege, what that looks like in our organizations. How do we perpetuate advantage? How do we perpetuate disadvantage? What could we do differently? And actually changing the mindsets of our small team and then the larger team and then the larger team so that it is sort of like, well, we talk about outbreaks in healthcare, right?
Excellent.
So I think success for us would look like having a financial services industry that is measuring financial health alongside profits so that every decision is being made balancing both profit and impact on financial health.
Excellent. Okay, so this is my last question for you guys. So you guys start thinking about your own questions. I'm not sure if there's mics around. Okay, and so maybe you, even while we're answering the last questions, you can put up your hand and we can get that set up. So final question for you guys. You know, there's people that are from all sorts of different geographies here, all sorts of different types of organizations, industries, different roles within their organization. I hear time and time again people wanting to be involved with systems change, with policy change. And so I'm wondering what advice you could give for people today in terms of how they might be able to be involved in this work, even if it's in a modest way. So is there any piece of advice you could give to us as a group, coming from the different places we do, of how we might be able to be involved in this type of change?
If anybody had been in my coworker Eddie Bully's presentation yesterday, he was talking a little bit about an initiative that we've set up in Far North Queensland called the North Queensland Indigenous Consumer Task Force. And what we tried to do with that was we tried to bring regulators to community rather than asking community people to deal with institutions, so reframing that access to justice. So to me, the consumer advocacy and that the voice of people on the ground matters the most when you're speaking to regulators, and it's something that we've tried really hard to embed in our service, is to bring regulators along for what we're doing and to the community rather than the other way around.
Excellent.
So mine is kind of similar to that about community and involvement, because my answer is thinking about relationships and building those connections and relationships across the different sectors. And a friend of mine recently did a PhD dissertation. It was like, what was required for leadership for health equity, that concept that I talked about. And what she found in the literature and in conversations with people was an aspect of bridging. And it was really very much having one foot in the systems and the institutions and one foot in the community, and being able to go back and forth and navigate, of really understanding what was happening on the ground and then what was happening in systems. And I spend sometimes too much in the office, and then everybody will be like, oh, you got to get out there a bit more, and then you spend too much time in the community because you're not actually answering your emails. So finding that balance of those relationships is my piece of advice.
That's great.
So my piece of advice would be to just start. Don't let perfect be the enemy of the good. We say this all the time because what we're asking financial services folks and others to do is challenging. It's multifaceted. So I would say find something small where you think you can have some early wins and some early learnings, and start, measure, and then build your momentum from there.
That's amazing. Okay, we're turning it over to you guys right now. Does anyone have any questions for any of the panelists? Oh, we've got one. And if there's any others, you can throw up your hand. We have 2 mics that we can pass around.
Thank you, and I'm going to jump straight to, and perhaps what you will find an odd question, but I'm not going to miss the opportunity to ask it with all this expertise in front of me. Working for over 30 years for organizations that are totally bottom line driven, multinationals, and working now with people, directly with individuals, with families that are facing money challenges, I have come to the conclusion that maybe it wrong, that at the end of the spectrum, both in the people who are deprived financially, but also in the people who are leaving the financial institutions, there's a lot of fear. And the fear, it's obvious what it's the fear in the people who are deprived financially. But in the people that are driving the financial industry, I think that the fear is about not seeing in the long term that perhaps having clients that rather than being highly in debt, and of course paying high interests that bring good numbers to the bottom line, is perhaps something that works in the short term, but not in the long term. And that could be being short-sighted in terms to see that perhaps people that will have money and that will be investing and that will be saving will bring more health and more well-being for the world and for everyone. But it seems to me that it's better to hang to the thought that, no, this is immediate, we're making a lot of money, so it's safer. And I have not been able to find statistics, indicators that will say, if you follow this model from a bottom line, from a financial perspective, in the long run will be more profitable. And perhaps I'm a little bit crazy, but I would like to hear your thoughts. But I think that
not crazy. Thank you for that question. So it sounds like this idea of short-term measuring profits and potentially someone who's more in debt might come with more profits, but the converse is over the long term, is it better for them to be healthier?
Right. So two points there. One, I think when you ask financial institutions, would you rather have a bunch of people who are in debt, which are at higher rates of delinquency, which then incurs the costs of collections, charge-offs? The reality is no, that's far more expensive than having a lot of people who can actually repay on time. And we see that with EarnUp's product, that it's actually, while people are prepaying, so the banks are making actually less on the interest, is actually putting them in a much better position because they have fewer people who are at risk of becoming delinquent or defaulting, right? I think you're right about the tempting nature of short-termism. And there's a lot of talk right now about the need to escape that trap and become more long-term. The McKinsey Global Institute did a study, I think they released it last year, if I'm not mistaken, where they actually quantified that companies that are more long-term focused and invest in the long term actually return more and have higher valuations, and their metrics are generally better, quantifiably better than those who are more short-term. You also have folks like Larry Fink, who's the head of BlackRock, the largest asset manager, who's basically for a couple years written a letter to the financial services industry, an open letter saying, you all need to have a purpose and you all need to be thinking long-term because that's the only way to drive value, right? If you think about a company like BlackRock has tons of index funds, right? So they're holding people's money over the real long term. And he's talked about the need for patient capital and things like that. So you have some voices out there and some data out there that's supporting it, but it is extremely hard, I think, to get some executives out of the short-term mindset.
Okay, another question. Okay, Jocelyn.
So I liked all of your presentations. They were very informative. Maybe I was talking too low. It's just going. Is that okay? Just moving back towards this political advocacy. How do we encourage people in making policies to move away from thinking of people as separate from the policies that they try to develop? So we have a policy for education, we have a policy for social assistance, we have a policy for income tax, and all of these policies are so separate, and they don't think about the person as a whole. And some parts of one policy will help and support a person, but based on the same policy, another person, it'll only put up barriers to them. So it's not working with a person or a people. It's they're not thinking of them as a whole person, but they're just creating them as platforms or I don't know. They see them as an ideological framework to work from to, support whatever the government at the time is or what people see as issues or concepts to develop. But how do we encourage them to create these types of policies so that they're fitting people, so that they work for people? Because in our community, they don't always work and they don't always fit. And it's a challenge wanting to work with other organizations within our community because they have different mandates and they have different obligations for their funding agencies to support people in different ways. And we're always trying to, what is that when you compress yourself? No, you try to fit yourself within something so that you're still meeting their requirements, but you're still trying to serve our community. But when can that change so that you're working with a person and these policies are meant to support that person? I don't know if I made sense.
No.
Hopefully I did.
No, you made sense. I think it's a very big question, so I'm going to look at who's going to answer that one.
I'll try, and then I'm going to pass it off so I don't have to have the last word. Because part of me, one of what I was thinking about even the previous question of we want governments, at least from my point of view, to invest in the things that matter. We also want healthcare available when it's needed, and so we cannot forget that, and I think that's essential, but that we actually have their studies, and in their Canadian studies, where we invest in those social determinants of health, of housing, of employment and income assistance, and it has greater benefits than healthcare. So they actually did one where they looked at life expectancy actually increased. But we have such short-term political time frames of wanting what the outcome is, and that is that investment it takes a long time for actually to see, and particularly the way chronic disease works, and then you get it, and then you have it forever. So part of me is thinking about that and what challenge, and that's where I keep thinking about change and the leadership and everybody in this room of continuing to tell the stories. And I went to one evaluation session this week, and we were talking about the importance of those numbers and actually talking about both successes and failures, but then to continue to talk about the people involved to tell those stories. So that's my thought about that, but I think it's hard, and that's why leadership is required for such big changes.
I'm not sure if I have an answer to it. I'll take a stab, though. So we have huge duplication of services in remote communities, and I think I'm not sure if this is where you're going with it, but there's a health service that comes in that does it fly in, fly out. We have our financial counseling services and, all these different services that come in. What the State Government Productivity Commission just did last year was they asked for submissions from the community to reframe how services are delivered in community to a community-led model. So the community elects who gets to come in and out, which is huge. So that report has just come out, and they've put together a 10-point plan about how this would work. But the idea of community decides who gets to come in and who's working with you. I'm not totally sure if that answers it, but that's what's going on.
Okay, great. We have time for one more question. I think we've got one right in front.
Thank you. Lisa, you had put on the slides there demonstrating the financial stress of people in the US and also in Canada. And I'm wondering, have you had a chance to compare, say, to other countries like Scandinavia or Japan? And the reason I ask that is I'm not familiar with all countries, but certainly I have a lot of family in Sweden. And one of the things I've noticed is that they feel a real loyalty to the system. They know they may be taxed high, but they say, yeah, we could come to Canada and be with the rest of the family that's here. We'd make twice as much. But they say the system's been good to us. From cradle till grave, we believe in it. We don't mind paying taxes. And I'm just wondering if there's been some comparison to other countries and perhaps some insights gained from that as to why or what those differences or structural differences that bring about perhaps less stress than we're seeing in North America?
It's a really good question. It's a great point. We at CVS, I don't know of data. I haven't seen personally the data from Scandinavia. We've obviously worked with our colleagues here at Seymour Consulting to think about U.S. and Canada. We've done some work in other markets where mostly it's been because folks have called us up and pulled us in because our focus does tend to be U.S. But I think it's a very good point, and unfortunately I don't have a great answer for you. Yeah.
Others want to answer whether Scandinavia is better?
I will say that Scandinavia is less diverse. So it's an interesting comparison often. We often get it in the healthcare sector. But it's a different context of colonialism, of racism, exclusion that we have here in comparison. So I'll just add that flavor to the response.
Great, and I think that's a good place to end off. Can you guys join me in just thanking these brilliant speakers? You guys have been great, so thank you very much. And then we're going to get you to take a moment. You should have some sticky notes on your table. You might not. If you don't, then maybe you can just take a piece of paper. We just want you to take a moment, and there's a lot of people who've been sharing their visions, but just take a moment to answer these two questions. If you do have sticky notes, write one answer per sticky note. What is your bold vision for building financial well-being for all? And then on another sticky, how might we get there? And we really would appreciate it if you'd actually leave it on the tables. And those are things that we can collect. It's such an important input to us at the steering committee, but it's also something that we can write up and find a way to get back to you guys as well. So if you could take a couple minutes and answer these two questions on stickies and then leave them on the table, that would be great. And then we'll get close to wrapping up.